our markets performing, David? Give us a picture of how investors are sort of playing the market today.
Yes, the market opened today, sustaining the bull run that we have witnessed for the past 1 or 2 weeks. Indeed, the market was up today by about 1.06%, and almost, in fact, all sectors of the market gained today. And indeed, the banking sector, being the arrowhead of the equities market, actually led in the gains. The banking sector almost hit about 3% appreciation today. And so it's a wonderful trading day beginning the week, and is a sign of wonderful things to come, perhaps throughout the whole of this month, as investors continue to expect impressive second quarter results, probably led by the results that are emerging from the banking sector.
Now tell me about Skybank. We saw Skybank release their half-one results on Friday. They reported a 36% growth in pre-tax profits. How is that stock performing today? I mean, I looked at it earlier and it looks like the stock gained only about 5 kobo, which the results were fairly good, but why didn't the stock perform so well today, as well at least as we expected it to?
No, I think initially when the result was released, market reacted positively. Indeed, that reaction drove the price up to about 3 naira 10 kobo. But along the line, I think speculators lashed into the market and supplied massively. So if you look at the volume of that stock that was traded today, over 11 million shares were traded. And so the huge volume that inundated the market eventually weakened the demand for the security, thus taking down the price to about 3 naira 7 kobo at close of trading. But yet, the stock still managed to gain about 5 kobo. Skybank is a bank that is performing very well. It's been growing in profits, and so a lot of investors are attracted to that security. And so a lot of investors hold the security. And so at a point where the price-sensitive information has already hit the market, speculators eventually come in and they drive down the demand for the security by oversupplying. That was what we witnessed today, and hence the full benefit was not realized.
Well, I want to talk about Fidelity Bank, which is a bank that we saw sort of dominating volumes today. What is behind investors' thirst for this stock, especially because we're expecting results from other banks? Why Fidelity Bank?
Fidelity Bank is a company that has been consistent in terms of its profitability and growth in its profit. Along the line, because of the large number of outstanding shares and perhaps because of the low price of the security, it's been neglected by a lot of analysts. It does appear that recently analysts have discovered the hidden value in Fidelity Bank and consequently have perhaps been advising their investors to take a look at that security. And I think that is what has heightened the demand for it. And if you look at the first quarter performance of Fidelity Bank, it was very, very impressive. And a lot of investors are also of the view that that performance is sustainable into the medium and long term, and hence the renewed attraction to that security. So it's actually the heightened and pent-up demand as a result of the discovery of new value in that security that is firing the new demand for it and the volume.
Now I want to shift my attention away, David, from the financial sector. Let's talk about the cement sector specifically. Now we know half-one results are expected in that sector. How are those stocks playing? I mean, we saw WAPCO was actually one of our top gainers today. How are those stocks playing? How are investors sort of playing with those stocks currently?
Yes, there are mixed fortunes emanating from the cement and building materials sector of the stock exchange. If you look at CCNN, the first quarter result was a decline in performance of over 50% when compared to the same period last year. But however, for WAPCO, it was an impressive performance when compared to the performance of the security within the same period last year. And so the fortunes for that sector are mixed, but that notwithstanding, it is a major sector and a lot of expansion and capacity building are occurring in that sector, and they are enough to attract attention of investors into that sector. But so far, as it is, only WAPCO was actually on heavy bid today. The others remained low in terms of bid, hence there were no changes in their prices apart from WAPCO. We can also say that market forces actually drove the demand for WAPCO today more than any other price-sensitive information.
Well, David, you know, another sector that we've been talking a lot about, we actually discussed about this sector this morning, the food and beverage sector has not been performing so well. We saw major stocks like Nestle, Honeywell, Flour Mill sort of losing points yesterday. How did that sector sort of pick up today?
Yes, that sector picked up today, just like even some of the laggards that we have seen in recent times, like the oil and gas and the insurance. So I think the general mood and sentiments in the market trickle down to almost all the sectors of the market. But the food and beverages sector has actually been upbeat for a very long time, driven by Nestle PLC and 7-Up and a few other stocks, such that at the end, I think fatigue eventually set in. But the general sentiment that has been driving the market, especially the second quarter results effect, also impacted positively on that sector. But otherwise, I think that sector has come to a point of fatigue right now.
Well, David, give us your outlook very quickly for the week. Are you expecting any surprises? Of course, we're all expecting to see the market continuing to pick up on the back of half one Q2 results. What is your take? Do you think we're going to see any surprises during the course of this week?
Even at this point, Uche, that most of the second quarter results have not been released, especially for the principal banks like GT Bank, First Bank, and Zenith. Yet, the all-share index is almost hitting 23,000 points. I think it will still probably surpass that 23,000 points as we move forward within the week, especially if the results of those principal banks are released. However, there is a caveat there that we know this week DMO is likely to sell some bonds in the market, and that is likely to lead to some little macroeconomic liquidity squeeze that can adversely affect liquidity in the equities market. But that notwithstanding, I think there is genuine demand for equities now, and it could actually overcome such a negative drag from the issuance of bonds and allow the second quarter effect take control of the market.
Well, certainly we'll be watching that, Mr. Adonri. Thank you so much for joining us.